Let's get more on the markets now with Richard Perry in London. He's a market analyst at the independent forex broker Hantec Markets. Good to have you back with us. So let's start with this second historic summit between Trump and Kim that's happening in Vietnam. How are markets reacting to that event?
I'm not entirely sure that they're reacting too much at the moment. I think that what the markets are going to be looking out for, however, in the next day or so, is whether there is a move towards the reduction of North Korea's nuclear capabilities. If that is started to come through and Kim Jong-un is willing to give up some of that capability, then it will put North Korea on the pathway towards possibly the removal of sanctions and the acceptance in the international community again. Now that starts to generate the possibility of better economic activity in and around the Korean Peninsula, with China also being involved there. So that would help to generate the positive risk appetite there. But in terms of the actual reaction to the markets at the moment, they're fairly much in wait-and-see mode on that one, I think.
Interesting. And what about Brexit? There was a lot of market reaction when Theresa May announced a possible delay to the withdrawal from the EU. How are investors feeling about that today?
Well, it certainly seems as though sterling continues to climb on that one. Sterling had a big jump on the upside yesterday, went through some key levels against the dollar through $1.32 big figure, which was a key breakout level, also below 86 pence against the euro. So these are big levels that sterling has now broken through, and it really does suggest that the market is now anticipating either Theresa May's deal going through or possible moves towards a softer Brexit, or perhaps even further down the line with an extension of Article 50, maybe even no Brexit at all. And that is always going to be sterling supportive. So at the moment, the markets are moving away from the harder no-deal Brexit scenario, being arguably the worst case scenario, and moving towards a better case scenario for sterling, and that is why we're seeing sterling lifted to the upside.
Interesting.
With regards to FTSE 100, very quickly, FTSE has been under pressure because you do get this negative correlation between FTSE and the sterling strength, which has around about 70% of FTSE earnings are overseas based, so therefore you get the negative correlation there. So sterling stronger is FTSE negative.
Can I ask you quickly about a no-deal scenario? So are investors right now feeling that result is unlikely at this point?
It certainly seems to be moving that way. Obviously, it's still on the table. That's not yet been removed. But Theresa May is putting the likelihood is that her deal will be voted down on the 12th of March unless she gets some substantial better deal from the European Union, again unlikely, and then she's going to move into the next phase of a couple of votes whereby the prospect of a no-deal scenario is going to be put to Parliament. If that is voted down, then the likelihood is that Article 50 was probably going to have to be extended. So yeah, it's less likely now.
Okay, we'll watch and wait. Richard Perry in London, thank you.